Morning, morning.
Waiting right now. Yep, chart's frozen. JZXN,
Bitcoin.
I think that's a Chinese company.
Thanks, Mimo. Man, CoreWeave looks juicy. $23 Bitcoin. Okay. Some rookie numbers. They're going to have to step those numbers up.
Yeah, the developers are checking right now. I think there's an issue with our market data vendor, the people that we get our data from.
God, this early to pump. This looks really thin if it gets going. No. Oh, gosh. Come on. RGTI juicing. JZXN. Why are you looking at it? It's not even moving. Why is it hitting the scanners? Morning. Oh, sorry. I didn't know you can hear that. 200K, 200K curse, baby. All these quantum plays are juicing right now. As soon as I enter again, freaking dump. So thin. And then right back down. What the hell? All right, screw this stock. Look at that. Come on. Move up. OMH Daily could happen today. Watch that. Just absolute hope water. Headline on IINN. See surge in commercial interest following FDA cleared R100 system. NVIDIA 145. Yeah. I was at 200K before I took a trade this morning. Soils. Any thoughts on Gmail earnings? I haven't looked at them, honestly. So I see it's down a hair. Watch this KZIA 5 minute. Good morning, Chip. Oh, I love it on my face. Love it on my face. All right, no idea what's going to move. There's some prospects. We'll see. 5-minute break. Be back for the open. Wrong freaking strike, but okay. Or wrong amount. That is not what I meant to do. Maybe it works out for me. We'll see. Okay. Might actually work out. Jeez. Cha-ching. Okay. Okay. No, 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 no. Don't do that. Don't do that. This is going to go back up, isn't it? KWM red to green. MBTS juicing. 220K. Yeah. I'm really shocked the market's not doing better with that CPI reading. Core Weave holding on to that 160. Elon's licking Trump's toes. Are they kissing and making up? Yes. I missed this. Think rotation, Chiefs. KZIA, interesting level here over 1114. We're pushed something up there. Okay. 98. Are you kidding me right now? Not the number I wanted. Garbage. There it is. There it is. Reckon I. Come on. 11? Jeez. Oh, no. Oh, jeez. And we're red on the day. Oh, jeez. All right. Well, I just enjoy, reaching the 200K mark over and over again. That's all, boys. Holy piss. Dropped 80 cents on me in 1 second. Okay. Oh. It's a good call, Siru, on this NAK. It's been a hot minute since I did a daily cock. Spread suck on it right now. Whoa. Yeah, that's thin. Zena daily. It's a W over at 588. Interesting. Circle. Daily as well. $5 away. CRCL. See what you're gonna do today. Oh, that is some horseshit. It's literally showing 480 right now. Wow. And AKA held. Damn. What stock was NAKA? What did it used to be? KDLY? Yeah. $76 break. Another cuck. If this 59 holds, NAKA is juicing. KZIA right back up. Watch it rip now. Piece of shit. Seven. There's a 1 minute. Took forever though. It's probably gonna need a 5 minute. We'll see. $12.50. No. Come on. Keep going. No. Get back up over 50. Yes. Of course, I get in right where it stalls out. Short share restricted, huh? Didn't buy her 11.50. And it's gone. Good Philly turn. $60. No! VIX is going. Market is pulling back. Naka. It's a W at 15. Come on. It broke it, and then someone freaking puts in shares right on 15. Ugh. Gotta exit. Golly, I'm getting beat up. I had like one winner, and everything else is a loser this morning. This is garbage. Gee. Freaking A, nay, nay. Gold starting to bounce. Nice move on bull. You know what? I'll go over it. Good fills. Come on, high day. 38, 5, 38. There's 38. course, I top ticket. NAKA. Go high today? No. GM juicing. Yeah, Quantum's doing well, huh? Or buck away. Circle daily continuation. Probably needs a pullback with this Bollinger Band expand. We'll see. NAKA 1 minute. Kind of an ugly looking chart. OMH. Nope. $100 basis points? Is that what he's saying? Benny would like that. Jeez. Imagine. Fat daily 950 level. We'll watch. What is that? 950? Sharp organization said big announcement coming soon. Oh, Billy! Oh, beta Chuck, I want to have your baby so badly. We'll name it after me, though, because I'm gorgeous. Holy shitballs. Let's go. Holy beta Chuck. That brought me back to green. Yeah, it was beta. Freaking A, boys. I can't tell you how much money that dude makes me. Sign up already. Holy jeez. We got SBet Daily. Damn, look at the volume on SBet. Hell yeah. CRCL has a W at 113.31. Of course, it just like stops. Nope. Nope. Oh gosh. Oh, there's 69. Jeez. The cooler boys. MACD's starting to curl down. I'm going to play this a little safe here and just take the L. Put fat, breaking some levels.
Let's get it, brother.
Who's that? Coach Rib, my man. Let's go, bud. Okay, hello, juicing. Jeez. Oh. SBet came all the way back down. Holy piss. Where are you getting that from, Cosmo? That's got to be pretty old, huh? Okay, we're running right up to it, huh? Where did you get that, Cosmo? And why do you have that? Like on copy pasta? A few minutes ago, I shot a message you sent. Jeez. Watch this fat. This could, I mean, there's a lot of volume on the anticipation of the break, so I'm thinking it's going to go. Maybe he needs a cock. Okay, hello's juicing. SMR's juicing. Damn. Stop going down. On light volume. Let's juice. 9:45 is the 1 minute. Oh my gosh, all these energy plays are monsters right now. NE, what are you doing? Playing catch up? You had 130,000 shares up and then 20 and 9 to knock it down a hair. Okay. NAKA coming back up. Holy NAKA. All right. Circle pulling back a little much. What's the 9? It's got a ways to go. How could you? Give us the cock here. Ugh. Look at this bullshit. Oh my gosh, you gave it all back. SMR juice. Hungs, whatever your name is, 51 months, my man. All right, I gotta get rid of this. This is about to go red on me. It's a shame. Knock, a nice move. Knock a 1 minute. Back to the highs. We need a better Chuck emote. I don't know what he looks like. Can't give the man an emote. Deserves one. This is a freaking shame here, man. Gotta let it go. Back to red on the day. Okay, hello. Absolute juicer. Dude, okay, hello. SMR, NNE. SMR is up 17 freaking percent. Okay, hello. 18. Was there news that I'm not aware of? Oh. Selected Alaska. Okay. Jeez. You have a picture? Oh, I bet you do, C-Bus. I bet you do. All right, this is the resistance level from the other day. This 34.22 here on NNE. Over that and holding should get you some juice. And of course, circle reverses and goes back up as soon as I exit. 5-minute now on watch. For me, it's probably going to be that 113.20 level that failed earlier that gets me back in it for a high day break. Holy S-bet. Damn it. Wasn't paying attention. That came down pretty hard. Yuck. Knocking in half. Back to break even now. What a freaking morning. Naka really tight. Really tight here. $16 level. Okay, hello, 1 minute setting up. Knock a high day there. Damn. No! Every time! Gotta be kidding me, man. All this, and you're gonna do a failed cock. Did you cuck? Oh, you didn't cuck. You just stopped me out. And then you go. You piece of dog turd. You piece of dog turd. And then you don't break out. Holy jeez. CRCL high day. Here's the 115 coming up on it. Oh, I'm going to be sick. Don't touch Tesla. All right. All right. I got you, switchers. You let me know if you switch positions. You needed to go down. You let me know. I'm your man. Meg L coming up to yesterday's high. Interesting. Gem? Holy shit. Thanks for bringing that up. I didn't even notice that one. $4.89. We're close, aren't we? Real good call. Real good call. SBAT pushing 39.50. Watch that. That break up there. What is it? 40. Holy OKLO. NNE 5-minute. Okay, LO just went high today, so I'm going to ride this one. Hopefully to the 5-minute at the very least here. KLO came back down after breaking high today. Is it running out of juice? 35. NNE 34.55 is the 5-minute. It's trying to go. Back these against us. Five. $50. 55. 58. Can we go high day? Selling some at a horseshit fill. Selling it all. Better fills. S-bet. There it is. Okay, Lowe's going. NNE, looking for high day break. S-bet 41.20. Jeez. Fat has a W on the 5-minute. Still looking for that daily on it. NNE, you were in that, Jeff Beans? Very nice. If he gets that 115, it's going to open up, I think, in a big way. Just because of how well it moves. Just my thoughts. We didn't get that 115 yet. It's going to be psychological resistance, but maybe we get it. After some pullbacks here. Still watching JEM for blue sky setup. What is this? Why is this updated? The hell? Kind of struggling to get going here again. Okay, hello. You need to keep going, baby. CRCL setting up a 5-minute. It's fat again. Rip through my level. Jeff, let's go. 6 months, homie. DFTV. Nice. NAKA setting up a 5-minute. QBT, jeez. Naka 5 is 1638. Fat just broke. With volume. I expect this to do good. Hopefully. SBET. What is this? A 5-minute setting up? Yep. Okay, hello, juicing again. Fat retesting 950. Taking NNE as a sympathy here. $62. $55. Come on, OKLO, keep going. This is hurting me right now. Come on, do it. Why can't we break 65? Oh. I gotta lower some. That's ridiculous. And cock, of course. Rising support. We have a juicer IPO. What do we got? I haven't looked at Siru's list yet. BOYG. Give me the deets. Huge. What's so huge about it? Give me the details. I need the details. SBET 5-minute played beautifully high day there. Naka 5-minute 63. Is that real? That broke down. Of course it did. Spreads are a little something. Great trade. Oh, am I still in this? I'm not. All right, I'm getting rid of this. This is way too floppy for my liking. And any dip and rip 5-minute potential would be 65 break. Yeah, Jim is wicking all over the place, but it got that wall there that, oh, there goes knockoff. Okay. 17. It's been a good trader. You know, this isn't the first daily cock, so it's not like you're going to get the continuation play. This was that chance, but you know, being that it's pulled back for so long without a daily candle over candle, you can expect a good move. We're getting $5 out of it, so hell. All right, back to green, barely. A wild morning, geez. Have I ever done Forex? No. I mean, like 15 years ago, I dabbled in it, but I didn't know anything about charting or anything like that back then. Well, not even 15 years ago. Gosh, long time ago. So again, what's up with this VOYG? 12 million shares, IPO at 31 per share. What is this? Voyager Technologies. Voyager consists of diversified solutions across 3 business segments: Star Lab, commercial space station plan to succeed the ISS, space station solutions, infrastructure, advanced space technology. All right, Space Shed, got it. PLTR Junior? How is it PLTR? PLTR doesn't do space stuff. That's a wick. Jeez. It's a real company though, so I mean, IPOs have been hot as soon as they're out of the gate. Look what Circle did. So, I mean, do we just buy 2,000 shares and hold on? Why do you even bother? They do defense also. There we go. Thank you, Steve. Key partners and customers include Palantir, NASA. Okay, now you have my attention, Siru. Lockheed Martin, the U.S. Air Force, Sierra Space. You probably put this all on the watch list and I completely missed it. Yep, there it is. Boca Runners, Morgan Stanley, JP Morgan, Barclays. Jeez. All right, all right, all right. Thank you, Siru and company. We got a banger. Okay, hello again. Come on, NNE, wake up. S-bet. Wow. Rip, dip, rip 5-minute. Jeez. MACD is still holding this thing back. Zena did the daily cock today. Didn't do anything with it. That's off the list. APLD pulling back. SMR monster. GME down. MBTS. KZA nothing. Wow, SBAT. ARAI through VWAP. REAL beta. Short report on them. Somebody couldn't hear what who's short. JCap. These shorts have been just bear traps recently. Look at this. Dip and already bounced. There it is. Look at that. All of them recently have done this. Short report out, bounce higher. We need Hindenburg back. Circle trying to curl. Okay, hello, juice. Come on, NNE. Catch up, bud. Gem broke, I think. Yep. This is finally going. I got too many positions. Come on. Oh my God. Gem over 5. Okay. Do your thing, Gem. Go blue skies. This diagonal needs to disappear. SBET juicing. Holy jeez. James Ulcer, TTI. Yeah. Do it. $55 break. Come on. Do it. High day. Oh, I had it way high. Got a really bad feel there. Really bad. That dicked my whole position. Okay, low juice. And give me 35. Gem back under 5. Jesus! Shkabow wow. All right. Put an order here for, I think it's 34.95 break. $34.96 and 35. Come on, give us an explosion through 35. NAKA, watch that one. Nice move back to high day. Holy jeez. That's a recovery. Should fill me on this break here. It's a 1 minute cock. NAKA, high day. Beautimus. Today's been a freaking battle. Holy jeez. $88 break would be the 30-second cock. NAKA, absolute juice monster. Holy crap, 1837. $1860. Holy battle. SBAT back to the highs. Well, okay, well, that was dumping, so I gotta exit N and E until it curls back up. Where are we at? $600. Holy jeez, I've had like 2 or 3 2K winners today. That tells you what kind of a freaking battle it's been. And I'm only up $600. Jeez. Did KZIA halt up? That was you yesterday. Yeah, that's annoying, right? It's freaking annoying. I see you, good banana. No KLO juices. Right back up. Thing's a monster. CoreWeave. What a disappointment. You had the daily W, you broke it, couldn't get the high a day. Damn. Gem, disappointment. That's off the list. KZIA. Holy shit. That was a weak halt, boys. That was a weak one. That's probably gonna do poorly for me. Circle coming back up. Ah, damn it, I just missed it. Dude, Burkett, don't you lie to me. I love you long time. Showing 12. Oh, baby. What a freaking move, man. Hi, Dirty Dan. NNE coming right back up to the highs. Gold pocket? Where are we measuring from? We're starting to break out of the rising wedge to the top side, which we should with today's data. Top to bottom today. Ah. See what it does. $11.73. Oh, that's fantastic. If this thing dicks me again, it just did a $2.75 move. If I get in the candle where it just reverses, I'm going to scream. $59.06. Circle going for it. Damn it. Yeah, pizza. That thing's juicing. And it's going to juice again here. There it goes. High day. Circle. That 115 on circle. Telling you. I get kind of a wreck thinking about it. When is this thing? 59.06. Under a minute. 1184. All right. Right, opening right under 12 would probably be good. Get that break at 12, and maybe a domino to high a day. What did I say? 5906. All right. S-bet. What a beast, dude. Ten seconds. Holy shit. It did it. Okay. And back down. Holy shit. And back up. Yeah. Well, I made money on it. 500, 600, 700 bucks. That last fill, not so fun. Yeah, it was quick. And an E high day flat top. Can we get a 35 break? $97. It's big volume. Come on. No, 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 no. You bitch. Oh, stop it. And now a cuck. Is that what we're doing? 73. 85. Circle. So close to that 115. And there's your cuck. I can't win it. I can't win him. The short report stock real? Huh? Oof, KZIA, that's dirty. Pizza gifting out the sub. Let's go, bud. Pizza's in chat for the old pizza ring. High. 31. No. Oh, yes. Oh, no. We got a hold over 115. 25. 15, 25, 40. Do it. Oh, bad fills on those. Small win. Hold that, dude. See if I can pull back and then go. Fat. That one's off the list. SMPX daily cock. Didn't even see that one. That one's juicing nicely. And W. Wow. There it is. The break, the dip, and then the retest and go. KZIA. Basically a flat open down there. S-bet monster. Send me a hooker. BTU here. Regulation, deregulation. Exclusive from New York Post on BTU. Slow down. Beta Chuck. Freaking love them. Deregulation. It's an exclusive from the New York Post. Deregulation should lead to 1.6 billion in saving for natural or for gas coal emission standards. So the play would be BTU would save money. Not all 1 billion goes to them, but that's the play. S-bet. Dip and rip potential. Spready, man. Dang. What's up, Swashy? Daily cock. Holding up so far. Market just took a piss. see if we got a bounce off this VWAP here. Gee, is there anything newsworthy moving this, or is it just a technical break to the downside? It looks technical. Yeah, Philion, we're up 1400. It's Lutnick. VVPR with a headline. Launch definitive. We're not going to give China our best chips. That's an NVIDIA hit. Buy the dip. Yeah, that's what's happening. Look at this bounce. But does that mean that you're going to allow China to buy the NVIDIA chips that were made for the China tariff stuff? I bet you that's part of the deal. I don't like this position now. China's not going to make a deal unless they can get at least the NVIDIA chips that they were allowed to get before. Right? Right? They never were getting our best chips. Art of the chip. Chip or dip. Chip or dip. We got another you got options with Kim Croissant. We'll watch today. Anything like this today is not gonna risk you signing. That's true. That's true. Jeez, spreads. All right, it's a 1 minute cock here on Circle. Gonna get through 116 again. Good point, Cheese. Good point. Come on. Okay, that was a beautiful exit. I'd be okay with a W with high day right underneath it. 1650. See what we get out of this. If anything. So 1 minute cuck not doing much. See if the 90 may holds. Thank you, Darksea. Get back over this 116. We want to see 116 break. And then just boom, boom, high a day. All the way up to the upper Bollinger Band, baby. So 1 minute cock kind of needs to do something with that. Let Nick, deal after deal will start coming next week. Markets almost recovered all of that fall. There we go. Come on. High day 69. Do it. There it is. I mean, it's just kind of go. There you go. 117. That's nothing. Come on. That's nothing. Oh, Billy. Oh. Let's go, boys. Let's go, boys. Let's go, boys. Selling half of my juicy winner circle. Now we're nice and juicy. Now we're nice and juicy. So stupid. Look at this. It is by the freaking dip. Look at this. Every time. We're going to freaking juice right through here. Europe will probably be at the very, very end. Oh, talking about the deal. Okay. After China. That's interesting. What has changed? Hard to pinpoint it, honestly. I somewhat feel it's... I think it's market condition. I mean, we've had a lot of stocks that do like 2, 3, 400% moves. We've had stocks like Circle do very, very, very well in the large cap space and give really good tradable liquid opportunities. I've been sizing up, so it really, I'm not making like sense. I'm not making any difference in the size of my wins on a scalp size. I don't know what I'm trying to say. Like, I'm still making 10 to 20 cents a trade, but my size is double because of the account size. That's what I'm trying to say. There you go, Boots. Yeah. My size is different, but the volume's the same. KZIA trying to curl again. Who is that, Nene? Same sense for sure. Same trade, just bigger size. Yeah, CRCL is juice. Are you in it right now? Are you like waiting on it again? That upper Bollinger Band's kind of freaking double. Girth it is. Yep. But I would say that the moves have been good. I want to say that the switch, it's not as hot as it was like a month ago, 4 weeks, 3 weeks. I want to say last week it felt like it got colder, almost like a normal temperature. I feel like we were a little euphoric before. Watch this 1818 on NAKA. JP went to the White House. I mean, just look at like, for instance, like Ross. He was making like 100K, 200K a day 2-3 weeks ago, and then like a light switch. His trades, I mean, they're still very good, but they're not 100K, 200K. So something changed there. That's kind of a metric I use. Is just like, what do other traders do? Are they experiencing the same kind of change of behavior as far as gains go? XTIA, what's this thing doing? Jeez. W. That not moving. What are we doing here? That's a lot of poop. And the hog. Gosh. 1818. Give it to me. Yes. Should move up. MACD needs a cross. Just gonna scalp it, I guess. It's not moving. Golly, that looks so good. I think it's this MACD. Circle. Setting up some levels. Yeah, I'm interested in this Voyager IPO. We haven't had very many large cap IPOs, I feel like. And the ones that we've had have been great trades. TEM. Wow, this thing's... It's up there. Wow, look at that head fake on KZIA. Jeez. Where are we at? 2100. Really? Left shoulder, head, right shoulder. Musk targets June 22nd launch of Tesla's long promised robotaxi service. Uh, there'll be a run up into that. What a battle today. Jeez. It's XTIA. What's the deal? Hmm. Jeez. Circle back up. Halting up. Jeez. Roger Chase. Circle is a cuck and go 5-minute. A yacht? No, I don't have yacht money. More bowling shoes. What's up, Rep? Feel like I haven't seen you in a while. Good to see you, my man. Whoa, what's up with ETH? Why did that just explode? No reason. It is breaking out on the daily and back over the 200. Maybe that's why. NAKA. I don't know what this is going to do because the last one didn't do anything. So I think it's going to have to show me first. Circle, still getting up there. Looks like it's coming. Hmm. XTIA, absolute juice monster. $75. There you go. Can you get 118 the first go? Sure can. Good trade. All right, XTIA. Trade negotiations with China will be a much longer process. So much for a deal. Serve daily cock. Oh, I'm out of buying power. Sucks. Nay. It's open. $50 hold. Another push. This Bollinger Band's getting in the way. This one isn't halting up yet. 95. Holy volume. 21% short interest? Is that right? Dude, someone's going to be caught on that. It really hasn't gapped up on any of these. Basically a flat open, flat open. It's like it's not really worth holding yet. Through the hole. Chart to watch here is SBET. You can see it on the 5. It's got price compression here. Lower highs and higher lows. Circle coming back up. So MACD is down. How much significance will the 10-year auction have? Probably a lot. When is that? Is that in an hour or in 15 minutes? Set 1. $119. Broke. I'll out the rest. What a frickin' trade. Juice is loose on this. The juice is loose. Can we get 120 today? Can we get 120? When you are trading long, are you just looking for MACD to be crossing up? It's just, okay, so it's one of the tools I use to give me an indication of the current state of the momentum. I find that if I'm trading the 1 minute chart, which I do, if that MACD is, let's try to find one that looks bad. All right. If the MACD looks like this, where it's clearly in a downward move, trading against it oftentimes, not every time, but oftentimes leads to a false breakout. Like this candle right here, prime example. Here you're thinking, okay, this is a candle under candle fail, bounce back up. I'm going to go long on the next candle over candle. Boom. What happens? You go boom. You get that false breakout. and then you're right back to the lows. That kind of move happens quite often when you're fighting against the MACD. Don't ask me why. It could be me trying to, I don't know. It's just a trend I've noticed. Is the computers put it in their programming that they just will absolutely not allow this thing to go up, a stock to go up if the MACD is down? I don't know, potentially. I have no proof of what causes that, but I find that a lot of times you'll get false breaks when you're trading against the MACD on the 1 minute. Now, if the MACD looks like it could curl up, I'll take a trade. So like if it's like this, right? Where, breaking a level could flip the switch, I'll take a trade. But when we're in like this part where it's pretty separated, no chance we're curling, I'm not taking a trade on it. It's just one of my checks. Pass me the cooler. S. Spent doing a 5 minute. There's a 2-point diagonal here. You can't put too much weight on a 2-point. And it's something. That's what we got. Big levels right there. Previous day high. Roger. XTIA murdering people. Halted right down at the 90 EMA on the 1 minute. So we'll see how that opens up. Circle 1 minute. See what that does. My chair. Over 46.50, I'd probably take a long looking for that 46.80 break. Okay. Went small because damn the spreads. Okay. It's gonna add, but we broke. Go high day, bitch. Oh shit. All right, it broke. Kerweb, I have no idea. SPX 500 USD. I don't even know if I can pull that up. U.S. Steel deal will be done reasonably soon, Ludnick says. Tim, about to make 52-week highs here. So, Val, for all you new people, great question, Val. Glad you found us. First off, while you're learning this, you should not be using real money at all. You will lose your money because you don't know what the hell you're doing. It's the same with learning how to drive. You do not throw a 10-year-old behind the wheel. They will kill themselves. And so too, will you lose all your money if you throw it in the stock market not knowing what you're doing. You're paper trading on Webull? Good. So you're probably going to want to eventually get out of Webull. Go find a real broker. I use E-Trade Pro. I do not recommend it. It is buggy as hell. I'm only on it because I've been using it for more than a decade. So find a platform. A lot of people use Thinkorswim. There's a lot of platforms out there. Find one that fits you, that you like the style of, you like the look, whatever, and paper trade on that because you want to learn on the platform you'll eventually be trading on. Circle, getting up there. Tem, what a break. From there, you want to learn support and resistance lines. You want to learn candlesticks, candlestick patterns. Watch this circle 120 break. It's going to be nice and juicy. And all this can be done for free. Just Google or YouTubing all this stuff. There's a bazillion people that put out these videos. Technical analysis videos, that sort of thing. You want to be learning that. At the same time, you want to figure out what kind of trader you are. Are you a day trader, which uses like the 1 minute or 5 minute, or 10 minute or 15 minute charts? You know, are you someone that it's all based off of personality type? Look at this. Look at this run. Do it! That's a big wall. We probably pull back one time. If your personality gets jittery with money in the, you know, putting money in the stock market and you're checking it every 20 minutes in the middle of the night, you wake up, you check your phone because you want to see where it's going to open up at, you know, that kind of thing, then you're a day trader. You don't need to be swing trading and holding for days on end because you won't be able to sleep well. That's how I figured out I was a day trader. Every time I would hold overnight when I was learning, I'd wake up 4 a.m., 5 a.m., trying to check to see if my stock is gapping up or down. Unhealthy. So you got to figure out what kind of trader you are, what time frame you're going to be trading on. And then it's practice, practice, practice. Ask questions from people that will answer your questions, a la this group. "10-second or bust." Yeah, and then it's screen time. Then it's practice, practice, practice. And you'll never stop learning, to be clear. You'll never stop learning. So after you get a strategy that works good on paper, that's when you take it to real money. And this is probably a 3, 4, 5 month process. Whenever you feel comfortable that you're making reasonably good trades with a strategy. When your strategy works, you know how to exit with profit. When it doesn't work, you know how to get out quickly. That's the name of the game. You let the runners give you profit, or the trades that work give you profit, and the ones that don't, you stop out quickly. That's the name. You master that discipline, you're good for life. You're good for life. So anyway, when you get to real money, you're starting off with one share. One freaking share. Look into my eyes. I'm not going to stutter when I say this. One share. Okay? Because now you have to learn the emotional side of trading, which is the absolute hardest, and you will struggle with it your entire career. I know, sounds fun. You have to master what it feels like when you get an absolute juicer where your green numbers are just exploding all over your face. You have to be able to handle that. Calm your tits. Bring it in. Then on the flip side, you need to be able to handle yourself when your trade really dicks you. I mean, dicks you good. I was dicked 3 times today. Anyway, so you got to learn the emotional side. Once you master 1 share, then you go to 2 shares, then you go to 5 shares. After you master 5 shares, then you go to 10 shares, 20 shares, 30, 40, 50 shares a trade.
Now for real life advice. Bush or a clean cat?
Oh my gosh. Clean cat, no doubt. After that, you stop whenever you're getting a little crazy. And you'll get a little crazy at some point. And then you back off. And at any time you're freaking out, you go back to 1 share. And that's the road. That's the road. One share gang. That's right. Are we gonna rip through this 120 here? These crossing down. So if we broke 120 now, it better be soon so this can flip back up. For crying out loud, you already clipped it. I mean, dicks you good. I was dicked 3 times today. That's true, B. Rogers. That's Newsmax. Someone in Trump staff owns some Newsmax. I don't know if that's gonna pop this or not. Oh, okay. Eh. Watch MP on that headline. Putting a 6-month hold on. Couldn't exactly hear what they said, but
Sessions are part of trade framework reached in London. Agreement still needs sign off of Trump and Xi.
watch USAR as well. China's putting a 6-month limit on rare earth export licenses for U.S. automakers and manufacturers. Huh. Watch Circle going for that 120 again. Big bid support. We got the W at the 90 break here. 20 broke. Eh.
QSG, Quantasing Group, popping to the highs here on some volume. Quebec Sandy Gulf.
Good fills, E-Turd on the circle there. Good fills. Good fills, bud. I'll leave Benzinga on a little bit. So there's been a lot of news today. So I'll leave it on so you guys get a little taste of it. If you're interested in Benzinga or Trade Exchange, I'll have them both on. There's a link with a coupon code that you can have. But the news plays have been absolute bangers today. XTIA, watch this one for a curl. See if that $6 level holds. Yeah, like a Shay style trade, a market order, a 1 minute breakout, and trying to sell in 2 seconds. You'll get a lot of slippage. So you just have to. What is this one, Luca? I was dicked 3 times today. You clipped twice? Oh. NAKA coming up again.
Now ticker Meta. In the press release, you can now edit videos with Meta AI.
You can edit videos with.
That shows Adobe are seeing a bump in activity ADB on that press release from Meta.
You can edit videos with Meta AI. No volume, yeah. But Google has VO. VO is great, but you can't really edit with it. Oh, later this year to be able to edit videos with Meta AI with text prompts. So it's later this year. It's not now. So let's see if we get any movement. Three and a half on purpose. I know, right? All right, break even trade. I'm okay with that. Breaking savages with the half read.
TNL Metagene, Tango November Michael Golf, TNMG, files for resale of up to 8.5 million shares by 3ILP.
Gem again?
That
Really?
is TNMG, Tango
Wow.
Michael November Golf.
Very interesting. K&W is interesting. 5 minute. Is the trade exchange swap any good? Yes. So trade exchange does not talk as much as Benzinga and BetaChuck, but it's good value. The this part, the text part is great. Show you time. So this part, I use this all the time. This is usually really good. It gives you headlines of things that will move the market in a timely fashion. So I use most of the time or all the time I have this up, and sometimes I'll have the squawk up later in the day, just because otherwise.
I was watching this Adobe ADBE hitting a little delayed action.
Trade exchange here
on those meta headlines, but we're also seeing weakness in markets as well. So it could be a correlation with both, but we are seeing Adobe weakness. ADBE.
So it is good. Sometimes he beats out BetaChuck on some callouts. It's not often, but he does. So that's why I have two. I've used these two for almost my entire trading career. I get them for free now because I'm a partner, but I was paying for them before and highly recommended them before, and I will always recommend them because they make me a lot of money. Why don't we hear BetaChuck? He hasn't talked. I mean, it was a normal Chuck that called out. There it goes. Jeez, very delayed. Sold that for like a $50 loss. There it is, freaking 2K winner. If I only buy one, Benzinga with the high beta squawk add-on. That's the one. That's the one I've made all my money on today on the news plays. So we've had MP. That was a news play from BetaChuck. DJT was $1,000 winner. This spike, right? Or it wasn't there. Or was it?
And AKA kindly MD more highs.
Yeah, it was here. 63%. That was a massive winner. The Newsmax one that just hit here. Now with news plays, you have to learn what's going to move things and what's not. When I heard that it was a staff or on his cabinet or staff or whatever that owned DJT, that's not going to move it because of some no name that I've never heard of. It's not like, yeah. So you just have to learn as well. I mean, those are three big news plays today. BTU, I took 10,000 shares on that one. I think that's all the news plays today. But yeah. The only thing that beats BetaChuck is if you own Bloomberg. I've been wanting to try out, and I keep forgetting about it. Scarelli has a news service. I don't think they don't have a squawk, but it's a lot of news headlines. I don't know what the delay is on it or anything like that compared to Benzinga or Trade Exchange. It's supposed to be a competitor to Bloomberg. You need to play. When was this? What are we talking about? Yeah, the God L thing. What are we talking about? That was on the day that Bitcoin broke 100K. What do you mean? If I smack it, Bitcoin keeps going up. Clip it. If I smack it, Bitcoin keeps going up. Look at that. Go up, Bitcoin, you bitch.
No, money.
Oh,
Money.
clip it. I know what I'm doing. I'm a professional. Goes down as soon as I stop. The power that I have right here. Tesla dumpy dump dump. My parents, no. And neither of my parents know I stream. And we're going to keep it that way. They wouldn't even know what streaming is if I told them. Better not put it. Actually, that would do well on Reddit. I'm actually surprised why most of our stuff doesn't end up on Reddit. Because it is gold. Gem. Wow. Is there news on this today? Closes the IPO. Okay. All right, we got a player here, boys. Getting the volume finally. XTIA 5-minute building out. What happens in SJ stream stays in SJ stream. There you go. It's going to take 30,000 of this gem. Chicka Bow Wow gifting the sub to SJ's mom. Okay. So. Oh, jeez. How's that not? $80? Oh, you bastard! I had to get out of it. Now it's going to halt up. What's the halt levels on this? Anybody know? Are they close by? Damn, okay, 528 or 45. Is it halting? Thank you, Looney. Looks like we'll get one. Chicka Bow Wow. Which one of them? We did have one of the gifted sub guys show up before. I can't remember what it was. Was it Hermie something? And he's like, I feel like I'm the butt of a joke. I can't remember who that was. That was funny. I can't remember what the guy's name was, though. Do I have a quote for Jim? Looks like 7 resumption price is what people are saying. That's what it's kind of looking like. 680 Cosmo, thank you. It's a nice gap. Now 7. Let's go. I feel like there's a song that represents what I'm in right now.
The charts are lit, the tension's high. Shorts are burning, watch them fry.
1938.
Candles pop, the squeeze is real. Feel the pressure, the market's deal. Moving up, it's a rapid climb. Bulls are roaring, it's their time. Shorts are crying, margins gone. Stock jocks calling, the squeeze is on, the squeeze is on.
Did I just get rid of it? Circle giving it back. Jeez. Get rid of these two. Is that 710? Got 1 minute on it. Still 7 for you. Nice. Still half at 7. I'm up on the day, so I can probably be a little sloppy, but I will probably be selling some. So I feel like 7 is going to put us right against the Bollinger Band. We'll see. I'd be stupid not to, right? But we have seen XTAI alt up multiple times today. All right, let's see here. 30 seconds. 684 coming down. So not a massive gap, 20 cents. Looking for a 7 break if we're lucky. This thing can dump on you, though. We've seen that today, too, so be careful. 10 seconds or so. 15 seconds. What's up, Pudding? 5 seconds. Whoa. 7. Holy. Still half up there. It's going to halt again.
to join the fight. Shots explode, the volume's king. Shorts are trapped and the bells all ring. Moving up, it's a rapid climb. Bulls are roaring, it's their time.
1472. On the right, Winnie. It happens all the time.
Stock jocks calling. The squeeze is on. The squeeze is on. No escape in sight. Shorts are drowning in the bull.
914 is it what it's showing?
Every surge of fear grows strong. Watch the bears fall all day long. The squeeze is on.
Wait, it was showing 1470? Get the hell out of here.
Titco runs, the Hulks come fast. Momentum's here, this ride won't last.
882? What the hell?
Chaos loud. Traders laugh in a bullish crowd.
The DOG is because of Israel action. What happened? I don't know.
Bulls are roaring.
750 now?
It's their
Yeah, that sounds about right.
Shorts are crying. Margins gone. Stock jocks calling. The squeeze is
Things
on.
all over the place.
Squeeze is on. The thrill is sweet. The shorts are folded amid defeat. Every tick the bulls parade. The victory rides on the gains we made. The squeeze is on. The squeeze is on. Options play. It's the
Certain brokers show the resumption quotes. E-trading in their infinite wisdom doesn't give me that ability.
dance while bulls are feasting.
Hey, sanctions on Israel yesterday?
Every shot the victory.
Kind of lost track of what's going on over there, honestly.
But the bulls still cheer. The squeeze is on. The squeeze is on. The charts are clear. The battle's won. Shorts are buried. Their day is done. Stock jock laughs. His gains are strong. The squeeze was on. It won't be long.
It's not that kind of day yet, Tim. Don't put the cart before the horse. This ain't even gapping, it looks like. You're showing 8 now?
Squeeze is on. The freeze is on. The shorts are folded in mid-defeat. Every tick the bulls parade. Victory rides on the
baby.
gains we made. The squeeze is on. The squeeze is on. The squeeze is on. The squeeze is on.
Minute and a half. $45 seconds. Flat resumption. If we get this is how I would play it if I'm not in it. If we get a slight dip with no volume, I'd play the break of the high. So it'd be like a 740 dip and then buy in as soon as I see volume coming back up for the 750 break. And I sell through that. I won't be adding, to be clear. But if I wasn't in it, that's the only way I play these. And even then, they can. This is the second halt. It can be. Here we go. Okay. 7,
VOYG
750.
indicating $62 to $64 IPO.
Oh, for crying out loud. Come on. I pushed the button. I pushed the button.
Shares priced at $31.
Crying out
VOYG.
loud. Hold down.
Victor Oscar Yankee Golf.
It better be a flat resumption. It better be flat. Which it's not. Do you, Russ? Did Voyager's opening at 62?
I know ticker Luminar, LAZR, and ticker Tesla. Note social media circulations of Tesla spotted using LiDAR in Palo Alto up to robotaxi rollout.
That's LAZR. Robotaxi using LiDAR? Interesting. Tesla doesn't use LiDAR.
It shows the LAZR seeing a bump in activity on that social media circulations.
This is beta check for you, boys. Sold half to lock in some gains. You heard it. That's beta check. Absolute juicer.
Shows that Luminar continues to see heavy activity, new highs. LAZR.
Love how it stopped me out of those 3,000 shares and then juiced. 56 break would be yesterday's high. Say the line. What do I gotta say? All right, let's go pay attention to this garbage.
CAT Caterpillar. Steve Weiss buys Caterpillar. Charlie Alpha Tango on CNBC. He
Good
knows.
as going heavy, baby. Well, I didn't make 2,000 on it. But if I would have made 2,000, see, the stakes increase now. All right. He's going to have to perform extra. ASST juicing. 116,
ASST,
juicing
asset
Apple
entities,
calls.
more highs now. Another pop here, 657.
Albina
Sandy Tango.
with the raid. Let's go.
Shares hitting $6.57, up 20.
Albie, how you doing? Freaking one of my favorite streamers. She sings good. She's fun. Check her out, everybody. Can we get a shout out for Albie? Trying to highlight your name so I can shout you out.
Steve Weiss buys
Already did. Oh, nice work. I should have never doubted you.
Industrials ETF.
Soils, I didn't know you were here. Otherwise, I wouldn't have had to try to do it myself.
X-Ray Lima
Soils
India.
holds this shit down. When does this open up? 30:38. Oh, great. 10-minute halt. Of course. Of course. Jeez. Who's that? The Pope? Showing $6. Of course it is. Of course it's going to gap down 50 cents. See ya, Albie. Thanks. Jeez, Nene. Albie, thank you for the raid. We're doing well today. For those that are joining that don't know who the hell I am, we're day traders. We make money in the stock market or lose money in the stock market. Just depends on the day. Just depends on the day. Depends if we're going to be on the top or on the bottom. If we're going to be giving it or receiving it. Okay!
Maveret as first and only treatment for people with acute hepatitis C virus. That is Alpha Bravo Bravo Victor.
We don't show nips here. We don't show nips. Luke, there's no evidence of that anywhere. Zero. Shut up, pudding.
Shares of AbbVie 192.54.
Nice 50-cent cap down. Gotta love it.
Alpha Bravo Bravo Victor up 1.5% today.
Today is an uncharacteristic day. We're up $6,000. Market has been wild. Fat coming back up. PHAT coming back up to 9. Send feedbacks. Jeez. Oh my gosh, Guac.
You smell that? What is that?
Luke, gifting it
Cologne?
to 2020 post.
Opportunity. No, money.
26 to the channel now. Let's go, Luke.
Money.
Let's go, buddy. This last, this is going well here on this LAZR. Can I get out of this stupid stock? When is this opening up? 35, 38? Jeez. What stocks did I trade today? A lot. This is all my trades. I mean, we've got Circle, LAZR, JEM, Adobe, MP, NMAX, SBET. I mean, tons of trades today.
KC Kingsoft
DACA,
Cloud announcing resignation of executive director and CFO.
NNE. There's just a lot, and that's only half my. I mean, there's a lot. Backtrack on LiDAR. It would just be a completely different system. So it's the first we've heard of it.
On ENTA, partners, Enanta Pharmaceutical partner AbbVie receives U.S. FDA approval of an
ENTA
expanded
Advanta,
indication for
with a press
Maverik.
release now of
That's
partner of
juicing.
AbbVie
ENTA.
on that Maveret,
That was Trade Exchange that had it
FDA
first there.
approval. That's
Saw that.
Echo November Tango
juicing
Alpha,
on that.
ENTA.
I don't really know why it was AbbVie that got the FDA approval, not Aetna. See, this is where you gotta kind of watch these headlines. All right, 30 seconds or so. I just want out of this guy. So move on. 612. It should open then. There'll be a small L on this slot. 10 seconds. Good Phil, you turd. Good Phil. Aren't the markets open already? So that was a stock that was in a circuit breaker halt. So when a stock moves too fast in a short amount of time, it can trigger what's called a circuit breaker halt. And that means the stock will get halted and no trading is allowed for 5 minutes. Gem halted, up or down? And it's up. Oh, down. No. The GME call option. Why am I buying it? GME calls? For breakout trades, use the MACD. Do the two intersecting lines have to be above the 0 line? No. They just have to be in a positive, for me, in my trading style. They just have to be in a positive position. So for me, the white line has to be over the red. Naka going for it. Definitely a good day, though. All right, we need to watch the Chem Croissant. Find it.
Welcome back to another episode of You Got Options from the SIBO floor, brought to you by Top Traders Unplugged and Kai Media. Today we get to talk to no other than Ben Eifert, the professor. He dives deep today on options, vol, and the coming regime, where we are in correlation, what happened recently with the tariffs, and what does that mean going forward? What are interest rates doing? How is that going to change the market structure for volatility for different products?
He's changed his prediction, by the way. Doesn't include a 40% pullback this year.
You got options. Execute your trade. You bet your money just got made. Flex. Time to trade the fade. It's the nexus of the game.
So today, after a couple macro conversations on You Got Options today, we get the professor. We're going to dive deep with Ben Eifert, CIO and managing partner at QVR. Hey, Ben, how you doing?
Dude, it's great to see you, man. Thanks for having me out here. I'm really excited.
Yes,
Thanks for
Cyril.
coming all the way. I know you took the red eye in from San Fran
What
today,
an-
so we really
what an
appreciate it. You got to
Amazing
it's like
open.
summertime
That's
in
opening
Chicago.
at 62.
Yeah, we get
It was
the rain.
pouring rain.
You get 24
Exactly.
hours of rain, unfortunately. But yeah,
It's all good.
But welcome to the Shy. This is fun. This is one I've been kind of looking forward to having for a while. I think, as I was saying before, there aren't many people who kind of see the big picture in vol and can dive as deep as you can. So I want to start out today about talking about kind of one of the most important things with options and implied volatility is their relationship to equity markets and kind of the beta that they have, the correlation they have, when it works, when it doesn't. Maybe give me a little
Do I
thoughts on
like him?
what happened at Liberation Day.
I like his breakdown of the stuff that goes on behind the curtain, and he's usually right.
How vol performed there and maybe why, and how you see that performing going forward as well.
And it's a lot of the stuff that, as a trader on the 1 minute chart, it doesn't really affect me much, but it does affect the markets in general. And he makes calls that no one else does and has been right quite often. And he just sees things from a different lens. As a consumer, I want to take in everybody's opinion, I like
So
him.
this is a really, really important topic, right? I mean, so a couple of key things. When you think about how is vol going to perform in a market event as markets are falling, a couple key things. One, there's like the speed of the event, right? And a lot of people don't think about this. They just think about, the S&P is down 10%. How much is vol going to go up? But it's like,
Shut up, QC.
if that's 10% is in one day, or in 1 hour or in 10 minutes, that's going to make vol spike like crazy, right? Because the value of convexity of like re-hedging your delta and your gamma on a move like that is really high. If that 10% is a slow bleed down over a month or two, vol might barely even rise, right? It might start to rise at first and then kind of fade, because underlying like the value of volatility again is in that realized volatility, how much money that a dynamic hedger can capture as they're rehedging. And so, you get like a 22 style sell-off, right, where the market was down very significantly over the course of that year, but vol kind of tried to rally, in the early parts of the year and then just faded and didn't perform, right? Because you got that like slow, choppy grind down. So that's really, really important. And then related to that is, positioning, right? And that positioning drives a lot of like the speed it moves down.
Because they're not subbed to the channel,
if
that's
the market
why.
is pretty well hedged.
Pretty evident.
If, the buy side isn't overextended, long levered, if market makers aren't too short gamma, like it's really hard to get that really heavy, significant vol performance to the upside. You really
I agree with you, though. I don't know why that dude hasn't taken a trip to Turkey yet.
Everybody's crazy. People are selling vol like nuts, and then they're scrambling to cover. They're getting blown out. Like that's when you get that vol event.
Supply and demand, right?
Supply and demand.
It's funny how you can get into all the quantitative kind of details and Greeks, but at the end of the day, supply and demand
100%.
is the most important thing, and particularly in a convex instrument like an option. I think
that's exactly right.
I think I focus a lot on dealer positioning. I know you do as well. I think it's interesting if you walk through the history of these kind of the correlation of vol relative to declines. It's almost like a sine curve. And what do I mean? If we go back to August 15, yuan devaluation, you probably remember this, right? Massive vol event, right?
Absolutely.
Screens kind of went black. It wasn't that big a move. It was the biggest move that we had since 2009. But I think it was an 8-9% decline, right?
Yeah, that's
but
right.
it happened quick. It was a matter of a couple days. And that vol exploded, right? So what happened 6 months later? Everybody's always fighting the last war.
Bingo.
All the short vol entities got washed out to sea. The long vol traders all got sort of taken on flows, and they had made a bunch of money, so they had more to invest. February 16th.
For those that don't know what he's talking about, by the
right?
way, when they say vol, they mean volatility, not like volume or whatever else you're wondering. It's volatility they're talking about.
Oil goes to 20. High yield starts blowing out.
What's up, you
and
mesh?
everybody's like, here it is. It's coming back.
And
they
doesn't
load
work
up
at
on
all,
puts.
right?
It doesn't work at all.
Yep.
And I think the important part there is not just that the implied vol doesn't work, but reflexively, it drives less realized vol. That decline was much slower, stair steps, but also very interestingly, it was a bigger decline. So instead of the 8-9%, we got 12% because hedges were not working.
Yeah, I think that's exactly right.
Right. And then we can go right back, like 16. And what happens? We go through 17, vol selling. Everybody's like, why would I own puts? Because in Feb 16, the biggest decline since 2009, it doesn't work.
Totally.
So vol selling comes in, XIV gets shorted.
Yep.
Volpocalypse.
Kaboom, right?
Kaboom.
No, it's very
Again.
cyclical because exactly to your point, it's driven by positioning.
Right.
And positioning is very heavily driven by what just happened last time, and everybody's got a short memory, right? So
Right.
it's like, yeah, you have a huge blowout of short vol positioning, and you have big inflows into tail hedges, big inflows into long vol ETFs from retail.
Right.
And then you get the unsurprising underperformance of like long vol positions. They bleed to death. Short vol's performing really well. Everybody's piling in. A couple years later, like now we're massively crowded short again, and we repeat.
Totally. And actually, if you just continue that, just to finish the thought here, because I want to illustrate how sinusoidal it is. October, November, December 2018,
Mm-hmm.
19% decline.
Mm-hmm. Exactly.
Right? Like the biggest by far again since 09.
Yeah, and December just
And it was
every day,
just
every day,
October,
1 or 2% down,
November.
1 or 2% down, no realized
That
vol.
was awful. That was like
Totally.
so painful.
Yeah, exactly.
COVID, massive vol explosion again, 22 then.
Slow grind down.
And so the question now this leads to, right,
VOY
is we just had 22.
indicating now $69.
69. Those guys must be hating life right now. They gave their shares away at 30, basically. It's going to open at 69.
And then we had a vol event
Mm-hmm.
in Liberation Day, a pretty big one,
Yep.
right? Are we going to get the vol compression decline? And again, that doesn't mean it's less of a decline. It doesn't mean decline's not coming, but it could be an even bigger decline in theory, right? With less, like a little bit slower. And so the question is that what you think is the case? And if not, why? Talk to me a little bit about what you see coming if we get a decline. And let's just say the next decline, if it happens, happen the next year.
Yeah, absolutely. I mean, when I look at positioning today and market dynamics today, you've got institutional investors pretty bearish, pretty underweight, chasing a little bit of upside, but again, like very low net leverage. But that started really with like the DeepSeek sell off and the factor rotation blowout that happened in February, and then again with Liberation Day. Reevaluation of the macro landscape. What are the macro risks out there? Policy instability, tariffs, all this kind of stuff, right? So you have institutions really, really underweight. You really don't have much of like the crazy short tail risk selling, crazy vol selling. There's a ton of vol selling through things like call overwriting, cash
on
put selling.
NUV,
But those are actually like
talk
market
of some
stabilizing forces, right?
FDA,
Those don't create tail risk. Those are
approval
unlevered strategies.
on
They supply gamma to the
NUVB
street. They supply
regarding
gamma
lung
to guys
cancer.
like us, and we dynamically rehedge that. We suppress volatility. You don't have the net 2019 2020 dynamics with people selling variance swaps and people selling crazy stuff that's gonna blow up in a nuclear bomb.
Right.
So without over levered fast money positioning, without super over
Shares
bullish
Innovation Bio
institutions,
popping
without tail
here
risk
on
sellers,
that news.
it's really hard to see that really big vol event, that huge outperformance of vol and that fast crash. I think if you see a sell off over the the next 6 months or over the next year, I think it's going to come from kind of fundamental headwinds and challenges in unstable policy environments. Going to come from declining earnings, and then that you're going to see retail trying to buy the dip. You're going to see kind of more of like a slow, choppy sell off where explicit, simple long vol positioning just might not work.
Right. I completely agree. And I'd be remiss if I didn't talk about the taco trade and the reality of the vol compression that's coming from the administration. Talk to me a little bit about how you see that playing in here and if that's having an effect. I'd love to hear your thoughts.
Yeah, I mean, I think the way that I think about the administration's stance here with respect to volatility is in some sense there's like an administration put in the market where, even if Trump says he doesn't care what happens to markets, I'm not sure that's right. I think that he doesn't like it if when there's bad headlines about equity markets are down, and if there's some set of policies that the market's pushing back on, eventually he's responsive to that. So that compresses the downside to some extent.
It's also polling, right? Because the market goes down, and that's bad for polling his first 100 days.
Very much so.
So there's almost a forced
GPCR
kind of reaction function.
Very much so. And then I think on the upside, when vol starts to fall, when markets start to rally back to highs, this is an administration that I think that's very dedicated to like being disruptive and doing new stuff that people don't necessarily expect, and that's counter to the economic consensus or whatever. And so I think as they get emboldened that vol is low, then it's more likely to see new policies kind of thrown at the market that can create some volatility and create some uncertainty. So I think that's it's this very like rangy kind of dynamic, right? Where I think volatility is supported from below by the fact that you've got administration that wants to do tariffs and wants to do a bunch of new stuff, but at the same time they don't want to see a crash, and you don't have the positioning in place to get a crash.
Yeah, we need a new acronym for like the upside part of that trade.
Yeah, exactly.
There's a listener who has a better kind of another food item acronym
for sure.
Great. No, but I do think you're right. I think the second markets start grinding up, Trump and the administration feels emboldened to institute some of their big policies, which are disruptive, obviously. And so you can kind of get this quick market rallies. We're going to push out some policy that's scary, and then a saving of the market below, which can create that range-bound trading. The other thing I wanted to highlight, which I thought was very important that you brought up, that I don't think gets talked about enough, is structured product issuance. The amount of not just structured products, but also ETFs now. We have seen an increase in the last 3 years from $500 billion of structured product issuance to almost $1.5 trillion. It has almost tripled. I mean, that's hard to comprehend, but the majority of those structured products are vol compressing, right? And not to mention all the ETFs and everything. So there's a structural offer in equity vol, in particular at the index level.
Very much so, and it's part of this broader trend of retail investors, high net worth investors getting involved in options and derivatives and futures and crypto and risky trading. Yeah, the structured product boom has been wild. So I've been involved in structured product markets for decades. They used to be a Europe and Asia thing, right? You used to be U.S. folks traded stocks, but what you saw after 2020 was a huge migration to where the big growth in structured product markets was in the U.S.
Yes.
And not just in the U.S., but actually unusually kind of evenly split, where with index, which has always been a big thing, but also single names.
Right.
So when you look at a lot of the structured product baskets that trade now are all of retail's favorite names. It's NVIDIA and Palantir and Tesla, all the momentum names, right? And so what that does, most of those products, there's a million different kinds, but the core thesis is usually it's selling long-term crash risk to get yield, right? So what you see is the long-term vol and option prices in the downside wing, and all those names, and an index gets crushed, goes below the call side. And so, we can I'm sure we'll talk about this later, but when you're thinking about where is there cheap convexity in the world, being on the other side of that kind of long-term crash risk is a really nice way to go.
We might as well talk about it now. You dove in, I think that, dispersion, right? I think, we are seeing so much index vol compression, and some of it's the macro, right? The reality is we are seeing more different news in big ways that is changing outcomes for single names. But we are also seeing a dramatic amount of vol compression at the index level that then is pushing correlation away from each other. Maybe speak to that a little bit. Again, a big idea that not a lot of people get, but I think a very important one.
Yeah, very much so. So, dispersion is a very standard trade that a lot of people have been involved in vol markets for a long time. So a dispersion trade typically is where you're buying a bunch of single name vol on the index weights, kind of buying the index weighted basket of single name vol, and then you're selling index vol against it. So historically, index vol used to be pretty expensive. And so people thought of dispersion as like a risk premium where you were just always supposed to do that trade. But exactly as you allude to now there's a lot of index vol compression, right? And it depends on what tenors you're looking at, but especially in the short end, there's a ton of index vol selling. And so, that trade has very much moved away from being like an all-weather risk premium kind of thing to more like a tactical thing, depending on opportunities. And sometimes you might want to actually totally be the other way. You might want to be short the single names and long the index. And so what we've seen is a huge amount of crowding from time to time in that trade. If you looked in February of this year, the pricing was reaching just incredible historical levels where single name vol was really expensive relative to index vol. There's tons of tourists involved in dispersion trades. People able to actually use QIS at bank desks to do dispersion without even knowing how to trade options themselves, all this kind of stuff. Then Liberation Day and DeepSeek really blew that out. Came back to, much more, normal kind of levels where then actually we got involved very heavily. So no, it's a really interesting trade and dynamic to watch, but it's very different now that you have this heavy index vol compression, coming out into the market.
Yeah, in 2017, I believe the stat is we had 30% lower realized vol than any other time in history. And we had also simultaneously 25% lower correlation between the constituents than any other time in history. That is not a coincidence. People first order effects are like, oh, the index is just a measure of what's happening to the single names. But the reality is often the opposite, right? The index itself is forcing this compression. And if certain names idiosyncratically need to go one way, by definition, by arbitrage, stuff has to go the other way. And I think that's really driving, again, if you look at history, implied correlation and correlation in general is just off the charts, right? It's completely different than it was prior to this period. And it really is because this world is becoming central to the whole conversation.
Yeah, very much so. And I mean, this last couple of years, you've seen, especially with the rise of very aggressive retail option trading and that trading shifting from sector to sector and moving around, you've had a lot of sector and factor rotation within the equity market universe that's really driven a lot of realized dispersion. You'll have It's interesting. Like, so people talk about, there's a common meme, like, well, in a crisis, all correlations go to 1. That's not actually totally true. There are crises that are very high correlation and crises that are very low correlation. Depends on what's driving it, right? So when you have like a macro crisis that's like sovereign risk related, you tend to get very high correlations between different equity markets because it's not a fundamental thing. It's not an issue in certain sectors. But like if you go back to 2008, like we had days in 2008 crash where banks were limit down and energy was limit up on the same day, right? And actually that was a very relatively low correlation environment given how high volatility was. And so
OSS
like,
juice and Annie?
that's been much more similar lately. Like even with COVID, there was some very high correlation bits of it, but then you had, tech reacting very differently than to, consumer products and stuff on the back of the pandemic and all the fundamental moves you were seeing there.
Yeah, I think it's an interesting crumb, like an important little detail that maybe people aren't thinking about because we had 2020, right? I think everybody saw correlation go to 1 or even above 1. If you have, it's kind of a weird concept, but it did. That dynamic was very much focused on the fact that vol was at the center of that issue on a macro level, that the S&P vol, that the macro vol was kind of driving everything. I wonder in this environment, to your point, not just because of the macro, but also because of the order of like maybe vol, people are more prepared for this one, et cetera. Even though it might be a big decline, maybe correlation doesn't work the way it's been working. And I think that's we'll talk about that if and when that happens. I think that's an interesting point.
Totally.
That leads us into big picture a little bit. Let's talk a little bit more kind of macro 10-year kind of picture. Obviously we've been talking about this for a while. I know you have too, but I think we're getting to a point where something different seems like it's happening. It's not exactly the same as the last 30, 40 years, especially as it relates to populism and protectionism and long-term interest rates. If interest rates continue to go higher here, right, and we continue to deploy these policies, these protectionist kind of unconventional, let's say, policies of the last 40 years, what does that do to vol? What does that do to vol in different parts of the market? Vol's not one thing, by the way, right? Vol is, we have FX vol, we have a commodity vol, we have, equity vol, we have bond vol, we have all kinds of things macro-wise. We also have, even within an equity vol, right? We talked about dispersion, but you have the long end of the curve, you have the short end of the curve. Give me your thoughts on what you think vol will do more structurally and how that might be different than we've seen for the last 10, 15 years. I'd love to hear your thoughts. Yeah,
totally. So I think a few different things. So first of all, in a rising and high interest rates and inflation environment, that drives a lot more kind of cross asset class vol than we've seen for, the last 20, 25 years. So like when we've had pretty low and pretty stable interest rates, for the most part, that's kept currency vol pretty subdued. That's kept certain parts of commodities vol pretty subdued. That's kept rates vol pretty subdued, depending on where in the curve. And we're very much shifting out of that kind of environment, right? I mean, we're seeing 10, 20 basis points moves in rates at different points in the curve on a daily basis. Right. We're seeing obviously big moves in gold. We're seeing, big moves in oil. And I think that's, one thing is just kind of structurally higher cross asset vol. Then next up, I think, inflation, higher interest rates, and also policies, protectionist policies like tariffs create, winners and losers at different parts of the equity market, right? So I think that is like a pro-dispersion dynamic where you could see, significant pressures upward on vol in some sectors, certain pressures downward on vol in some sectors. Again, companies that are responding very well, companies that are responding very poorly. And so I think, there is kind of a structural bid to like single name vol and to, sector vol relative to index from that kind of dynamic for sure.
That's right, Tim.
And then I think, longer term, one of the things we think about is just, we've had really this notion of U.S. exceptionalism, the exceptionalism of American markets, driven by the fact that all the smartest people in the world come to the U.S. to study, to work, to create companies. And, you have every sort of big, meaningful tech company in the world is started in the U.S. as it ends up in the S&P 500. And, a lot of the current policy mix is potentially, challenging that thesis on a go-forward basis, right? And, what that does to long-term sort of equity returns and sector mix in the U.S., do you start to see tech and some of the innovative sectors move elsewhere? That's a really interesting set of questions. I don't know the answer to it.
What does it do to the U.S. dollar?
What does it do to the U.S. dollar?
And maybe the most important thing, what does it do to the Federal Reserve and the exorbitant privilege of the U.S. dollar, right?
Yeah.
And I think those are big, big questions. It doesn't happen overnight. They kind of happens very slowly and then all at once. So I think that's something that obviously
Final
we need to think
trades
about.
on CNBC.
I think one of the things I really think about as it relates, I completely agree with you,
QXO,
to this kind
EDR,
of structural change is
XLE,
the Federal Reserve
SCHW,
itself,
final
right? We
trades
had
on
this Fed put
CNBC,
that was unbreakable forever,
QXO, Evercore,
for 40 years. Since 1982, really.
Schwab,
And the
ND,
reality is
Spider
that
Energy,
was because we had
ETF
structurally
final
low
trades on
inflation. We had a
CNBC.
deflationary environment, which allowed the Fed to come in and rescue
Jesus.
mandates, price stability.
Oh, no, don't.
And let's say GDP. I know it's maximum employment, but GDP growth.
Pizza,
pretty easy
not
to just
et tu
keep on
brute.
coming in and saving the market with infinite supply of money when necessary. There's a big question. If this inflation is structural and we are truly in a stagflationary environment, which protectionism and populism, a lot of the policies you're talking about drive, then the Fed gets put in a box. And so if the Fed's in a box, I'm guessing that the bottoms aren't V-bottoms as much, right? I'm guessing there's a different kind of equity vol price action that tends to come from that in a bigger crisis.
I'm listening to the
so I think
the wisdom.
It's a really important point. I think this moving away from supply side economics and the Federal Reserve running everything to a more demand side policy really drives a different vol outcome, particularly for equities. I did some historical research on this a year or so ago, and I think it's very interesting. The highest vol of the 60s and 70s, particularly like
This is why I have
68 to
neck
82,
problems.
that
Who's this
rising
one?
interest rate environment,
Friggin'
was
DePaul!
gold. I guess not too surprisingly there in some level, but also, and this is kind of counterintuitive, bond and FX vol, right? If you look at equity vol, and if you look at other commodity vols like industrial commodities, vol is actually structurally way lower. Short-term vol is about the same, meaning like 1 month, 3 month vol is about the same, maybe even at points higher at the very short end of the curve. But if you think about it, that makes sense. Equities did not move structurally for 14 years, 68 to 82, because it's a nominal asset.
That's exactly right.
The market didn't go anywhere. So you had this push-pull of two factors, which I want you to dive into, but which is one, as inflation happens, the market gets cheaper. By definition, if the market's at the same, it gets cheaper, right? At the same time, you get multiple contraction because the discount rate or the divisor to equities in terms of a price earnings multiple is driven by that 10-year bond. And so this push-pull really just kind of almost like a vice that drives implied vol long-term lower and lower. With the structured product issuance increasing, the move into these things, I could see a really counterintuitive long-dated vol compression into a decline. Not yet. And again, it doesn't mean there are great short-term opportunities. And by the way, it doesn't mean the market's not going to have, there are actually more recessions, more vol events in that period. But I think that's really interesting and kind of rhyme.
I think that's right. And even if you look at previous environments where we didn't have major inflation, but we had sort of a longer term bear market. You look at the tech bubble unwind and the bubble.
The hell is that?
Bid for vol on the way down because you had this sort of choppy, rangy downside. And I think, exactly. With
For
inflation
freaking
surging,
crying out loud.
has these mixed effects on equities, right? Exactly to your point.
All right. Get it in. Come on. Come on, throw your shit. Come on, you got 2 minutes. You got 2 minutes. Get it out of your system. 2 minutes. Throw shit at me for free. Get it in. Get it in. If you didn't know, Pizza Wrangler, this is the time when you get to throw shit for free. You get 2 minutes. Get it out of your system, boys. Huh? Get it out. Oh, yeah. Hawk 2 up on that dude. Here, I'll make him big. Don't clip that. Get it all over his face. He needs it. He needs it on his face. Your aim sucks. Stop putting fat dudes on my face. Come on. You boys can do better than this. Oh, there you go, Saint. Stop with the dudes on my face. For crying out loud. You got about 30 seconds. Get it in. Get it in. Stop putting me on that dude's face. Stop putting fat dudes on my face.
Members on that 10-year note auction. The auction draws 4.421%. The bid to cover of 2.52.
10 seconds. Get it in, boys.
The win issued on that was 4.428%.
Get it in. Final call, last minute buzzer beaters. Okay.
Bonds through inflation in some sense. Obviously depends on all the kind of spillover
Depends,
effects.
yeah.
But it's very push and pull, right? There's very mixed effects going on.
Yeah, I completely agree. Things like
Mother
that,
of God!
and
Depo.
just talk about something other than equity vol here. Actually had incredibly low vol in that period. You would think, OPEC crisis. Like, it must have been crazy. The reality is it was like a steady grind higher. And the trade was actually to sell puts in oil and to buy calls in gold. Because the vol in gold was crazy, but it was also the best performing asset during that 60s and 70s period. So kind of an interesting kind of mental model to put around.
Yeah, very much so.
Put around things as you think about these things. From a macro perspective, right? It's hard to put these two things in your mind. That vol on a longer term basis may not perform, but you might get much more pinball, or that it might be a much weaker environment for equities, and you might get bigger declines along the way. So how do you as a vol manager, how do you deal with these two kind of conflicting notions? Like what are some things that you do in order to take advantage of a need for much more non-correlated, much more need for hedging, not relying on 60-40 stocks and bonds, right? We need a much bigger toolkit, right? How do you do that in the same time?
No, I think that's exactly the right question. I mean, you think about traditional asset allocation, right, of like 60-40 stocks and bonds. That works in a traditional macro environment where equity market downside is cushioned by falling rates. Like we may well not get that. If you think about potential equity market downside scenarios from here being caused by some combination of policy uncertainty, of kind of concerns about the U.S. government or about inflation, those are things that make bonds and equities sell off together, right? And so, that traditional portfolio really doesn't work. And then you think about the institutional variation of that, where big endowments and foundations and pensions have adopted huge exposures to privates. That also, we've reached huge valuations, and a lot of that stuff, it's kind of not being marked. The liquidity profile is really dangerous. Like, how are those portfolios going to work out over the next 5-10 years?
I love that these are called alternatives, right? It's
exactly.
Like you're like, what alternatives are you in? Like, they're like, private equity and private credit.
That's right.
You're like, you mean 2x levered equities or credit, right? With 10-year duration with no liquidity, right? And 2 and 20 fees.
Exactly.
I mean, it's not an alternative. You need truly
it's not an
non-correlated
alternative.
things.
And a lot of those institutions are like 70% in those assets and have contingent private capital calls. They really don't have the liquidity. They're going to be, in a bad market, they're going to be selling that stuff at a discount in the secondary market. It's going to be a very bad scene.
And they've gotten away with it for 40 years, right? And that's why, recency bias, that's why it's grown to the size it has, because any decline we've had has been that kind of Federal Reserve put-driven quick recovery.
Don't have
all
to
less
market.
than 3 years. Don't have to market because it's a 10-year window. What happens? Big question. What happens if we get a 68 to 82 environment where over 10 years you have a decline in markets? Then you have to see the mark-to-market there. And that's when,
exactly
on a levered product with 2 and 20, the pain could be really bad. No liquidity getting out of a lot of these names.
I think that's totally right. And if you get a proper recession and a credit cycle at some point in there, you wind up with, private credit's gotten so overextended in terms of, every small business has 10 private credit guys knocking on the door trying to lend the money for absolutely anything. Yeah. And a lot of that stuff comes home to roost. So exactly to your point, I think like the need for alternative assets and alternative exposures and ways to make money over the next 10 years that aren't just driven by that.
True alternatives.
True,
right?
alternatives.
I want to be clear because everybody, if you go to your wealth advisor, you say, I need alternatives. 80% of that is private credit, private equity, real estate, and all of those have the same problems, right?
No, I think that's exactly right. Yeah. So to your point about, how do you manage this kind of environment? What are some of the things that vol managers think about? So again, we talked about not necessarily really expecting or seeing like a big sudden market crash with a big vol event because you don't have the catalyst in place for that. You don't have the market structure in place for that. You don't have the positioning in place for that. Things that we think about, in 2022, actually being short delta versus short vol worked out really well, right? So on a market neutral basis, you get that kind of grind down, vol's underperforming, the short delta.
I hope
really,
so,
really
Nene.
well. That's one trade that's
I don't know what
really
it's going to look like.
You can think about different kinds of
Let's go
option
for money.
structures, like longer term downside put flies, right? Things where you're not betting on that big crash. The big crash isn't going to work out. You're spending a little bit of premium, but doing really well if you get that 10% grind down or that 15% grind down. A lot of those kind of trades can work out really well in that path. Yeah, just getting out there and, buying a whole bunch of Vega, like, may really not.
Yeah.
The other thing that, and you alluded to this, but there's so much supply of short dated options in the world, all the call overwriting, all the cash secured put selling out of big institutions and everything, that inevitably that gamma in the front of the curve stays
Ticker
kind of
Voyager,
cheap.
VOYG,
And,
IPO
folks like
is
us
open.
usually end
Victor,
up staying
Oscar,
long
Yankee,
that.
Golf.
Holy balls! It hit 60. It's 70 already. It's a dollar spread.
VOYG, Voyager Technologies, shares opening at $66.62.
Not going to get the candlestick until this one closes.
Victor, Oscar, Yankee, Golf.
Watch this 70 break. It's 70.20.
71.15 the high now on VOYG, Voyager Technologies.
72.
Shares were priced at $31 on
Horseshit, Phil! Both fills were garbage, but I'll take it. Jug shot, yeah, it's been okay. It's been okay.
And then you think about this.
I say that because
Edmonton's
Edmonton's
driven policy, or reversing with the market down, market up. Like new tweet, market gaps up 2% in the futures, and then sells off the next day. Owning that gamma is really nice because you can just scalp that sort of P&L from market movement.
Right, because at the end of the day, if you are more likely to get those declines, and they are actually more likely to even be bigger because the hedges aren't working, right? You're going to get the realized move, and again, it may not be as fast, but you're going to get some type of meaningful decline likely in those scenarios. The key is, managing the implied vol part, which can be a little hard. And when interest rates go higher, I mean, I can't emphasize this enough. As interest rates go higher, you get to now stack a return on top of a T-bill yield, which is going higher. That dynamic, which isn't very well understood, is what's driving the structural product boom, by the way. People don't really understand this. Because if you could get, let's say, a 3% yield on or 4% yield on something, but you were getting 0% underneath the hood on the risk-free rate, it wasn't competitive. But guess what? When you get to a 4.5%, risk-free yield, and you stack, let's say, 4.5, all of a sudden it's very compelling in a non-correlated way with way less risk. Why would you be in equities, given the risk when you could do that? And so I think that story is very compelling, and I think a reason why I think everybody needs to be looking more non-correlated.
Yeah, no, very much so. Like, I mean, one thing that we do, obviously, we run the absolute return, hedge fund stuff, but we also work with big institutions that need to think about this kind of hedging question of, like, how do we manage a big decline in equity markets? And, think about all these questions about the path, and, but the amount of capital involved can be very small, right? Because you're running derivative overlays for someone with a ton of cash efficiency and can generate, a ton of P&L in the scenarios they're worried about with very, very, very little capital.
Right. I think the challenge, obviously, is, 60-40 scalable. It's easy, right? And so when you look at non-correlated assets, it's hard, like we were saying. And so I think we're seeing a ton of innovation and a ton of growth in the space, but I mean, this is still 1% of the space, right?
Yeah.
And what we've seen is, I mean, we were just at an equity derivatives conference, right? It's like almost a doubling of the people there every year, much like the structured products doubling. I'm here to tell you, we went from 0.5% to 1%.
The name of the show,
last several years. And this should be 10,
you
15,
got options.
20% in terms of non-correlated products. If you look at a 60-40 portfolio, people don't talk about this, but a 60-40 portfolio over 125 years, we take this last 40 years in that data, and you really need to look at a broader data set. People look at me like I'm crazy because the last 40 years have been top left to bottom
Yes.
right interest rates, which is the
Exactly.
most important thing.
Yeah.
So if you look at a broader picture, the 60-40 portfolio has a 0.45 Sharpe.
That's right.
Stocks have a 0.32 Sharpe. I mean, you and I know in our world, right? Like risk-adjusted returns, that's awful.
Totally.
Like if you can
Yeah,
only manage
and-
that in your portfolio,
And people
you're
look
doing
back
it
at
wrong.
equities the last 15 years and they think it's like 1.5 Sharpe game.
Yeah.
right? It's not.
Right.
Not through the cycle.
And actually, the other part is that's over 125 years. So we're talking 60-40 in general. If you don't know where things are going,
Yep.
It's got
But
fishnet
after
everything.
periods of increasing interest rates, you're more likely, obviously, to get, declining interest rates, you're more likely to get increasing interest rates,
Yep.
right? And if you get increasing interest rates, those periods are the times when the 60-40 portfolio gets hurt the most, right? Because
Very
the
much so.
divisor, as we we're talking about, the discount rate affects bonds and stocks and pretty much every
It's
other
just 70.
asset.
See if 70 can hold.
Completely.
Yeah.
No, and you look around the world, obviously U.S. equities have been incredible. And again, this American exceptionalism dynamic, but like you can look at markets like Japan where you had, 10, 15, 20 years of, flat to down equity markets. Like that's a realistic scenario in some cases where you start at really high valuations. You have kind of a big shock to like the nature of things. A lot of that comes out of the market. And like
What's Carvana,
American
CBNA
investors just
shares
are
seen a
not
bump in
at all
activity. Note that Jim
psychologically
Chamos
prepared
on
for the idea
Bloomberg
that can happen.
says he is short Carvana.
I'll tell you what, this floor will be a lot more full, and there'll be a lot more of us, in these conversations. But I think it's important, right, that to do it now, right? I'm fearful that like people will start doing this more in 5, 10, 15 years after it's too late, and by then 60-40 might work a lot better.
No,
right?
it's totally true. And it's always a dynamic. Even, again, I mentioned we help folks with tail hedging. You always have the most interest in tail hedging right after a market crash.
Right.
Come on, guys.
Well, this is like playing fighting the last war.
Fighting the last war. Exactly
Right.
what you said.
Yeah, completely. Couldn't agree more. So what about zero DTE, right? Where, obviously we're talking about front end of the curve, back end of the curve. Do you use zero DTE options at all? How do you use them? Obviously the most kind of, the moment on the distribution that is the most impactful. Give me a sense of your thoughts on zero DTE. Obviously, I think it's like almost 60%.
Yeah, see, they're up to about 60% of volume. I think there's a few different
That's
big flows
wild.
there as far as I see. One, there's a lot of people using them for intraday levered directional exposure. And that's both retail and hedge funds. So there's big macro hedge funds that they want to get long today. They get in there and they buy, upside 20 delta calls or call spreads in big size, right? So that's one big flow. Another big flow on the other side of that is there's a lot of income type sellers. So there's, people that just sell them outright, the downside, the near the money. There's people who do call overwriting, like daily call overwriting. They own some equities and just every day they come in and sell zero DTEs. And you've got, some pairing off between those two flows. It's not one way. There's buyers, there's sellers.
Right.
And then I think the third big category, and that's a decent part of the volume, is just a lot of like big complex option portfolios, market makers, prop firms, us. We just use it to constantly clean up the book. Like every day, it's like, oh, I've got this expiring. In the old days, you just had to hold whatever weird gamma positions that you had at different strikes, and now you can just come in and kind of clean up your book on a day-to-day basis. So there's a lot of volume in that. So I think it's actually a really useful tool. We do some of that from a portfolio management perspective. We do have strategies where we're getting in and trading the zero DTs, usually looking for days where we think that. It's just gamma's too cheap, like the straddle's too low, and we'll come in and buy some zero DTs and maybe near the money, maybe a little further out of the money, and kind of let it run. But yeah, it's a really interesting space.
What are the most structural? Are there any structural things on the zero DTE side that you think are like edges because of supply and demand? I don't want you to give up your secret sauce or anything, but if you think there's any parts of I'd be curious to hear your thoughts on.
Yeah, really, I think the only part of the distribution where there's I think a pretty net supply demand imbalance is there's some pretty big selling of crash in zero DT of crash puts. There's like an account out there, for example, that trades actually OTC with a bunch of banks, like to get more leverage, and it is sized such that probably if there's a big one-day down move, it's going to be a major issue for a lot of the banks.
Right.
On their side of that. There's not too many buyers of that stuff. You can see it in the skew curve. If you look at the term structure of skew, it's a fascinating thing.
Price
for,
compression
people
there.
who
We'll
live
go
in
to pop
emerging
or
markets, 'cause
drop
the term
soon.
structure of skew is like this super inverted U-shaped thing where skew at the front end is really low and the middle of the curve is really high and at the back end is really low. Structured products are selling the back, hedges are buying the middle, and then crash put sellers are selling the front. And you just see it right there in the price.
Totally. No, that is actually, we see the same thing, obviously, an incredible opportunity. Skew itself, right, is like probably the biggest structural opportunity, right? The question is, how do you manage that
Pizza.
tail risk, right? What are
We
your
love
most like favored, and you can list several like ways to kind of think about getting convexity in general. You know, managing what's already a steep skew out there and trying to get that convexity. Not just in equities, maybe other
really
parts of the
tight.
market, different parts of equities.
Expect
I'd love
a
to
pretty
hear
decent
your
move out of
thoughts.
this
Yeah,
range.
totally. So a couple different things. Like whenever we're thinking about how we want to structure the portfolio, both for absolute return and tail hedging stuff, we're always thinking about, okay, what's oversold? Where are there structural flows in the market that you want to be on the other side of? And then what can you sell against it? And so in that example, we talked about structured products, right? So there's a ton of
NUV,
selling of
Innovation,
long dated
Bio
downside, both in
shares,
index and in the momentum single names that, you know, are investors' favorites. So what that lets guys like us do is we'll be, you know, buyers of that long dated downside, call it like, you know, 2-year 10 delta, 20 delta puts, for example. And in the absolute return business, we will sell something else against
shares
that, maybe
were
6
halted
month, maybe 9 month, 10, 20
at,
delta
the
puts,
lows.
and then buy a little bit of gamma at the front end to neutralize the thing. And what you
Now,
end up
the
with
official press
is a
release is
curve
out
trade where
on
you're buying vol, you know, 10 or 15 points
NUVB.
below where you're selling it. And then
It's a nice
the
one.
dynamic there is because structured products typically are effectively what investors are doing, they're selling knock-in puts, right? They're not just regular puts. They
So
have
fight
a
is
barrier
over
where
70.
if the note hits that, if the underlying hits that barrier, the note goes away, the investor just loses a bunch of money, and then the bank loses its long vol
5
position,
minute.
right? So when the bank issues these, they
Cock or
immediately are
cock
going
here.
out in the market and
Go
selling
either
vanillas
way.
against it. They're selling those crash puts. And so when the market goes down enough, when those names go down enough, they start hitting those barriers. All of a sudden, the banks lose all their long vol positions. They have to scoop up all the shorts. They have to buy it all back, and there's like this big short squeeze in long dated vol, right? So you have a mechanical long convexity to that position that comes from knowing that you own the stuff that there's going to be a short squeeze in if the market sells off.
Supply and demand.
Supply and demand.
Yeah, I agree. I couldn't agree more. And importantly, and I think you alluded to this, even when that doesn't happen, at least you're getting the benefit of that long dated compressed vol eventually sliding up the curve and other natural buyers coming in and kind of supporting.
Exactly. So you have a nice positive carry to that long convexity position.
Couldn't agree more. That's a great point.
From Business Insider, Amazon is launching.
Anything else that's on your mind these days?
Grocery business.
Oh, it's Instacart, huh?
Is that things that you're kind of thinking about here as we move forward in the next to the summer and into the fall?
Yeah, I mean, I think the interesting thing, you know, with the summer here is really going to be to see, I think, what sticks in kind of tariff policy, what doesn't. You know, we've had a lot of back and forth, right? Obviously, we had Liberation Day, you know, looking really, you know, coming in really high with those numbers. Then we had a lot of it walking back, and now we're actually getting some pushback the other way, where, you know, Trump is kind of coming back out and going after China again and saying, oh, you're not negotiating in good faith, coming back after Europe. And so, you know, I think it'll be interesting to see whether this just kind of keeps on going and we keep rolling the timelines out, or whether we actually start to get, you know, some of these levels put in place and some really big changes. I think that's going to be a big driver of what we see in, you know, near-term economic performance and earnings for a lot of corporates.
Yeah, I couldn't agree more. The long end of the curve, we've kind of alluded to inflation and long-term. You know, we've yet to see the effects of the increase in tariffs and not just what's going to happen, but what are the net effects of what's already been instituted going to happen? Part of that's been particularly muddy because obviously if you say, we're going to do tariffs in 90 days, everybody's going to pull forward demand. And so that pull forward of demand is actually really muddying even more. We don't know what lies on the other side of this, not only in terms of policy, but even in the current policy structure. You know, this is a much less linear kind of outcome. Actually, it could be very kind of, again, front loaded and empty on the back end.
100%.
So I think there's a lot going on there. And as we've alluded to a couple times, the long end of the curve in terms of interest rates, look, if this keeps going higher, I mean, we have a ton of refinancing that needs to happen, not just in commercial real estate, not just in, private credit, non-investment grade equities. I mean, we could go on and on about it. The majority of the refinancing happened in 2020 and 2021, and the average duration was 5 to 7 years. So you do the math, right? If you look at Shiller's like CAPE index, right? You know, obviously we're at record kind of levels. But the reason that doesn't work so well as a timing indicator is because there are long and variable lags to interest rates. And the reason there are variable lags is because it's very different if interest rates are steady at 4, the amount of refinancing that's happened, relative to, let's say, they go to 1%. Guess what? Everybody coming in, and the lag is going to be a little bit longer, right? So I think we've had this real lag on the exposure to interest rates. And it really is, that check's coming due. You know, that's my opinion. I think we have people like, oh, interest rates went from 50 basis points to, 4.5. Everybody said interest rates are going to be a problem. See, they're not a problem. Well, it doesn't matter till supply and demand, right?
Yep.
And so I think that's a really important point. I think people are kind of whistling by the graveyard. And I think that's why the long end of the curve, by the way, is just like tick, 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 like slow motion, train wreck happening there. And the administration knows it's a problem, but they haven't been able to do anything about it.
Totally. Yeah, just think about the housing market. I mean, the valuations,
tight.
the price to buy a house relative to people's income in the U.S. has gotten so out of control.
Especially in San Francisco.
Especially in San Francisco and major metropolitan areas. Yeah. And it was one thing when, rates were zero and you could get that 30-year jumbo at 2.8, percent or whatever. But now you're at 7, 7.5, 8. Yeah. And like housing prices haven't really adjusted yet. But, as more and more people need to come into the market and need to buy a house, like how are they possibly going to be able to come up with that kind of cash, right?
Yeah, they still have to buy, right? And that's the thing. We are sending money from the
Bottom
top
end of play.
more to the bottom. It doesn't feel like it, but it is
Either direction.
in the last 8 years, right? And protectionism does that to some extent, right? So that policy is ultimately driving more demand. We're creating more households. We're sending more money to millennials who are chasing these crazy market prices, but have to.
Yep.
If you want to start a family, you need a place to live, and yeah, it's a crazy dynamic and very different, as we've said, in the last 40 years.
Very different.
Very macro-driven world. Definitely a time for a need for non-correlation.
100%.
Thanks for joining us today, Ben. Appreciate the conversation and look forward to having one again sometime in the future.
This was so much fun, man. Thanks for bringing me down.
Great to see you, buddy.
Awesome.
Okay. Jim. Is that still moving? No, down. Okay. Jeez, gave the entire day's gains back. No, they're not going to get bored with this. Patience, grasshopper, patience. I can't short it, obviously, so I hope it, the resolution is topside, but goes down. Circle's getting interesting. So 68.50 break would be a 5-minute cuck. There's pressure on it. All right, 5-minute cuck. Dude, this PHAT. Do I have anything in the swing account? I feel like I don't. Okay. This thing's coming all the way back up. ASIC? Wait, what? What? I missed this one. This is the ASIC miner company, right? There's fat. No, it's not? Oh, shit. Oh, insurance. 25-30s high a day. It's actually doing really well as far as holding up. Is that gonna juice? President is apology. No need to review the contracts.
Shares of Tesla moving a bit higher.
See if that busts you through the BWAP.
Fortune reporting exclusive from Fortune on Microsoft. New Microsoft Copilot floor signals broader risk of AI agents being hacked.
Like the way out
That
further
from
comment,
Fortune.
no
Michael
efforts made to
Fox
review
Trust,
government contracts.
Michael Sandy Fox
Musk
Tango
companies.
MSFT.
No effort.
On Microsoft MSFT,
Fat
coming
high
from
day.
Fortune, Microsoft Copilot flaw signals broader risk of AI agents being hacked. There's a commentary by Fortune on Microsoft Copilot MSFT.
Going the wrong way here, bud. Jeez. Okay. Okay, hello, trying to go. July 1st? Jeez. I haven't even made 40K this month. You want me to make an extra 40K? Catalyst? I think DJT was one of the. I had a few. It wasn't like one of them that just did it. Let me look. So we got DJT with that news hit. That was a big one. CoreWeave is actually my second, huh? And Circle, NNE, LAZR was a news play. Gem, just TA. MP was news. Naka, TA. Voyager made a little bit on that. BTU news. Fat, my biggest loser. Followed by KZIA. Freaking A. So we're only up like, this is before fees. So it's probably like 25K this month. You guys freaking want me to make 70K this month? That'd be a stretch. End of July, that's possible. If the market stays the way it is for me. It's like my kind of trading is working for me now. Doesn't mean it will. Just got to ride the wave until it gives up. Arms. I've only done that one time. It's a very specific play.
Ticker Tesla seen bump in activity. New York Times is reporting Musk called Trump privately on Monday night. Musk spoke to Trump privately before posting a message of, quote, regret.
Fat with the juice, man.
New York Times reporting that President Trump that Elon Musk called President Trump privately on Monday night. That's from the New
Members
York
posted
Times
in the news desk
reporting
coming
that.
from New York Times. Musk spoke to Trump privately before posting message of regret.
That's why I have as many news sources as I have. All three of those guys gave it at different times. Yeah, it was BBBY for it was like 60K out of that one, and then the rest of the trades of the day got it to 84,000. Yeah, no one has a clip of it. There you go, Jake. Don't clips expire? I don't think so. Do they? Maybe they do? I don't know. I didn't know that. No. No time taker. Whatever happened to Dev Devi? He's around. I think he's any on vacation or something like that. Didn't he say he was having his he already beat last year's gains and he's like he's going on vacation or something like that? Or am I mistaking him for someone else? Coin getting a pullback? KLO at high day. 30% move today. Jeez. $87. Don't reverse on me. Really bad fill, but okay. Yeah. Yeah. Hot damn, there it is. There it is. There it is! Just one little scalpy, baby. Just a little scalpy. Nay, there is no shadow trade. People, let's go, bud. 3 months. Get that gold badge. Just when you know you're here. You're here to stay. When you get the gold badge, you're here to stay. 3 months badge, and you never look back. CRCL back up. You're next.
Stock JT in foil hat.
Let's go, bud. 27 months. You know. Look at VOYG. Shockingly not shocked. What was your beef with Weeble? I don't think I had any beef. Oh, you mean the platform? I never have tried it. I'm calling it. Good day. Can't complain. $6,600. There's plenty of things still moving, but I gotta get my eyes off the screen. Oh my gosh. What a freaking week. What a month. What a back-to-back month. We got to keep it going. Yeah, I've been doing well. Thank goodness. And thank goodness that the market's hot while I've scaled. So if you notice, I've been taking like 4,000 shares a trade. On the really high beta stocks, I've been taking 1,000 shares. So still trying to get a cushion on the day before I go balls deep, but nonetheless, going balls deep. And it's paying off right now. One of these days I'll have a minus 5K day, and it'll humble me again. I'll get scared and shit my pants and go cry in a corner for hours on end. But until that day, we'll ride high. Be back at it tomorrow, same time. I'm not waking up early for this shit. It's dead right now. We're gonna go raid Lonely Winter. Peace out, everybody.